Hello, Fidelity Fortune Hunters. Tom Wilmot. Happy spring to all of you. It's a lovely weekend. I'm recording this on the 3rd of April, 2021. And in this video, we're going to look at 3 different tickers, starting with Google. And we're going to take a look at reviewing a number of the features in Fidelity Active Trader Pro that you need to be an effective trader. And we're going to take a look at how, in particular, the Fibonacci drawing tool can help us to define some targets when the market begins to break out in one direction or another. So, hope that's of interest. If so, hold on to your hat, and we'll get started right after this. Okay, friends, in this video, as I mentioned, we're going to take a check on 3 ticker symbols just to see how the market's been developing. And we've had quite a good upward thrust here into new high territory just before the Easter weekend here in the States. And so as a result of that, we have some interesting price action to monitor. Now, we'll do some quick review of a few of the features in Active Trader Pro to begin here, but for those of you who may be new or just stumbled in, there's a whole playlist on my YouTube channel about ATP, and I'll list a link to how to get to that playlist down in the description below this video. As many of you know, we typically are spending more time on Forex than on the equity market because that's our day trading job. However, because of this price action, there's some interesting things that we can show you as part of our review today. So let's get started. Bottom line is here, what we want to take a look at is some of the indicators that we have on the screen. Now, for example, in this case, this is the RSI, and I do have a band between 45 and 55, and you can see here, as you pull back into the bands, which is one of our favorite kind of entry ideas, you can see that down here we came to the top of the 55 but never breached this barrier here. Now, first of all, when you see this, you may not be able to see this line very clearly, so if that's the case and you want to modify, you left click on this. Once again, left click on this down arrow. We modify. Let's change the color here to orange, and let's see if that brightens things up a bit. And sure enough, you can see that, I hope, a little better. I had to do the same thing down here in the stochastic because it was a gray color, and so when I modified, the color palette came up. I left click here, and there you go, and you can pick it out. It was something like this. It was not visible, basically. Okay, so as many of you know also, one of the problems I've found with Fidelity is that in this platform, there's no way to define any default values for yourself. You have to go in every darn time and change these colors around to meet your needs. I wish there were a way to build a template where you could have some defaults, and I've made that request numerous times, but it's fallen on deaf ears. Okay, so in any event, now we're going to apply again, and there we go, and now we're back. Now, notice here, one of our strategies, our major strategy, is that we have an up-facing set of moving averages, EMAs, as you were. We can pull this back, as you know, and move this over here to improve our margins a bit. And here's our line below here. We'll move it up. Notice here that we pull back into these moving average bands. We've crossed over our 47. We have an up moving, we had a crossover occur here, and then we had our first pullback into the bands, a shoot up, pull back down, and then we zoomed higher with a breakout move. Okay, now notice that when we did this pullback into the bands, we had a pullback here, down we went into the, with the red below the yellow, and then we crossed over, and that was our gap up. Likewise down here, a pullback and then a crossover and our gap up. So you can use the stochastic for these pullback moves, and for sure you can go the other way. Notice that we came up and then we crossed down with this one here. We came up into this area and then we crossed down briefly and so forth. Obviously, these are the areas where you're most overbought. And in this area, sure, we had a breakup, and then we came straight down all the way from the 80 all the way down to the 20. Now, obviously, you could also change this if you wanted to, and you could modify those values. And you could, in fact, say this is now, let's say, 75. And you could say this is a 25, and you could make your adjustments any way you see fit. So now that comes down and is a little easier to see. Okay, now now that we've taken a look at the stochastic and how you might use it, I'm actually going to get rid of it just to improve our real estate. Here's the down arrow. We left click, we simply delete, and that'll get rid of that one. Then we can squeeze down our RSI here, and now we've got some more real estate. Now, with this bottom margin control here, which you see with the double arrow line, if you get too close to it, sometimes the lower level prices are right on that line. So if you want to click and put a trend line in this area, it's pretty hard because once you get close to the line, it's hard to find it and to move it. The downside is a little difficult. Even if you move the margins up, it's still pretty much closely attached. So having no margin between the lowest price bar and the line is a bit tedious for sure. But in this particular case, from our point of view reading the charts and the candlesticks, we came down, we came back to the 47, we fell over, obviously, came down, filled this double bottom, and now some of you are very brave, may want to take a shot at an uplift here. I wouldn't do that. It's a counter trend trade. I would wait until we got up into this crossover area. Notice the price action here and so forth back down into the bands. One more thing I need to review with you. This is a pretty quick chart. This is more for day trading kinds of activity with options or whatever. Notice I have a 39-minute chart on the wall. That means that these 10 bars were the 390 minutes divided into 10 units. So you have 10 candlesticks per day of trading. If you wanted to come into this area, you can click here and you can have some of the default values. You can type in new values here and then apply. But also I have saved some up on our diskette icon here. And if we wanted to change to 78, which would be 5 bars candlesticks per trading session, you could click this one. Or this is 195 minute. And there you go. This takes a look back in time for sure. And once again, if you wanted to see less time pass on this chart, you could click this and you could move your cursor to drag this particular slide bar over in order to increase the width of each of the candles. This one goes back all the way to this earnings and so forth. There's another earnings statement in here and so forth. So the 195 minute does include that, and you can get your events up in this area here and see I have earnings clicked. Okay, now the situation here is we've been running with Google along the top line here. We have been seeing what's going on, trying to take out this all-time high. Let's go back and take another look at our 39-minute chart, and I want to now show you a little bit more about those Fibonacci's. Okay, here we are. Now what we're going to do, and we've come back to this, and you can see my default still has the stochastic in it, so let's review by going back to modify and delete. And let's go here and grab this. This line here is different from the line on the chart itself, which is up here, you can see. Now that we have this much, you can see the lowest value on that is where this line would be put. Okay, and so if we go back in here to take a look at this chart, let's see what we're going to do. We're going to shrink it up. Here we go. Once again, just helpful review for you. We're now going to come over here, pull back in, up here. We've got that in pretty good order. Now we'll get rid of this. Now we're in good shape. Okay, now our Fibonacci drawing tool. It's not an indicator, it's a drawing tool. We come over here, retracements. And the basic situation is let's go from this to our low, which was confirmed by this double bottom. Here we go. And you can see it's that annoying purple color. We're going to click here. We're going to change that. And what I meant to tell you was that over in this area, this is very close to this line that you can see here on the chart. And so therefore clicking down in this area to find it or to select it is kind of a pain in the neck. Okay, we have our yellow. I usually get rid of the 23.6. It does show some activity on many charts, but I don't care about it, so I'm going to remove the selected, and I'm going to snap to price, and I'm going to apply. Now, bottom line here is what we have on the wall right now is this area, and here we go with our double bottom. Now, notice that this is an area here where we have a cluster of price bars, and that meant that the market found this to be kind of a sweet spot. So we don't necessarily need to use this as the high value. You could come back into this, and what we have to do is click again, because I said snap to price. Let me get rid of that for a minute, apply that. If you'd like to go around and play and say, well, maybe this should be down in this area, more in the middle of this sweet spot. And you can see it occurred over here as well. This market was very happy about $2,069, right in this area here. And so now what we want to do is come back in here. And what we're going to do is we're going to select it, bring it back up again, and we're going to add a couple. We're going to add the 127. We're going to add the 162, which would be our version of 1618. Add value, and then we're going to add the 200. And I know I'm doing this after it's happened, but please take a look. Oops, where did my 200 go? I guess I didn't add it properly. Let's try again. I'm going to add a value and then apply. And notice that we're up in this area. We came up and hit it. Now, if you come to the top of the price bar, sometimes you have to fiddle around a bit and see where the sweet spot was. Notice we came right to that value. Notice also the 127 was our first target after we broke out through the previous high. And notice also that it's in this area, that 127. And notice that the 162 is up in this previous high range, okay? Notice that this was our target in this area. We had 10 bars. We had our breakout gap up move in the morning, and we went all the way to the 200, which is double. Obviously, it's a reprise of this particular pullback here. So I thought that was kind of an interesting situation. You might expect a pullback at the 200, even on the 39. It's a pretty short time frame, and obviously the dailies and the 195 are a little more valid in terms of price targets, but you might expect a pullback here into the bands. At some point, having hit the 200, it came to this area. It paused only briefly on Friday, and then Thursday rather, before Good Friday, and then zoomed higher. Okay, that's enough of Google. Let's go on to another ticker. And I'm going to choose Taiwan Semiconductor. Okay, let's let it come up. Notice that what we had here with the semiconductor stocks, also on this 39-minute chart, was a kind of a definite move to the downside. If you are an account that has under 25,000 and you're limited on your day trading, you can't get out of a trade right in the middle of a day. You got to hold overnight at least. Well, this 39-minute could be helpful to you if you come back up into these areas, picking out your 10s. You could very well hold overnight, and these kinds of down moves that you can see here, notice that we came up, crossed over the bands, then fell down, up over the bands, fell down, and then that was kind of your signal that you were moving ahead. Now we've moved back in this direction, and so what we're going to do is take a look at this. We're going to shrink this up again and take a closer look at things. Once again, that's really annoying to be up in that area. We're going to move our margins around. We're going to get back here and get rid of the history viewer. We're going to come back this way and do this. Now, once again, just to make sure you understand, Fidelity does not allow you in the tool. There are various workarounds we've talked about in other videos, but it doesn't allow you to do an extension of the Fibonacci's. You can't go from here, point A, to point B, pull back to C, and then an extension. The tool only goes in reverse. And by that I mean we come here to the draw tool. We have this. Let's go here. Let's come down. And once again, because we don't want to get mixed up with that line down below, we're going to come here. And we're just going to leave it close, okay? Where's our line? We've got to grab it again here. And we're going to pull it back over, and we'll put it as close to the green bar bottom as we can. And then what we're going to do is select it, change our color, and now we're going to get rid of our 23. Now before I do that though, let me just show you something here. Notice that there is some price activity around the 23, but I don't find it as interesting, in this area. Let me pull this down further to show you. It really does cluster around the 23, but I'm not interested in that. So when I select it, I usually get rid of that one, and then I just use my 3 middle values. And you can see this is the area where you really want to see what's happening. And notice that it's right in the middle of this area, that at the 50% level on the retracement, that you get this crossover. You had a nice move to the north here, then a pull back into the bands, and then a zoom higher. Notice that this one day, which was, I believe, Wednesday of last week, in the end of March, we had a situation where we came right back to this previous high, and then we had another gap up. So let's just see what our Fibonacci tool would tell us about what our target might be. The reason I mention this is when you see this kind of a configuration where the bands are moving up, but you're getting some resistance at this level, you may need another day before you get this breakup. There's no bearish indication in this particular chart range right here. So I would say that that's another reason, and we'll see with Amex when we talk about that one next why that's important. Okay, so we're going to add a value, and we do it 127, and we'll add that value. And then what we'll do, because that one wasn't close enough, 162 for the 168, and sure enough, look at where we are in this area right here. The possibility exists, especially once again, because we're on this 39-minute chart, and those tend to be easier to break through than the dailies or the 195s. Our price target up in this area here might be a 128.12, and we'll touch base next week after the week is over and try to come back and see how this happened, whether we're going to get a continuation to the north here, and we could get from 124 up to 128, a 4-point move. That could happen even on Monday after Easter weekend. Also, at this area, you could have a pullback into the bands, like we saw down here. Notice that we came down into the bands. This was our area here where we did not breach it to the downside. We held above the 61, and then we moved higher. Okay, so that's the target to be watching on this one. All right, now what I'd like to do is one last one, Amex, because I think we've got another particularly interesting situation going on here. Now we have to annoyingly come back and do some of these changes again as we've done before. Come back to this area. Now our band will be down here, so we do have a little room in this area. Okay, now notice the downward trend. This was that last week when the financial stocks were under some pressure. Came down into the bands, back up, resistance at the 47, resistance at the 47 on the way up. Okay, so now we've turned the tide here. We have this move, we have this move, and so forth. Now what we'd like to do is shrink this down a little bit. Let's see what we got. And now we're going to come back in here with AXP, and we're going to see what's happened with our Fibonacci retracements. And what I'm going to do is use this one just for now to see what happens. We could go all the way up to here. I think that's a little bit, too far, but you can play around with these for sure. Come to the bottom. We'll click on the little button to get it to go to yellow. Now what we're going to do again, now you can see more why I'm interested in some defaults. Okay, and we're going to snap to price, and we're going to apply. Okay, now in this area here, this is the one where maybe you want to do some adjustments, because look at this. We had the tops here. If we were to draw a line In this area right here, notice that what we've got here are some highs. I'm going to change this also. This color stinks. So let's take a look at what we could do here. We'll do red just to see what happens. Okay, there's our red line. Now notice this was it. It came down, touched this, went back up. It's clustered around this area, so it has a high frequency of closes close to or near this bar, which is at 144 something or other, 144 approximately. So notice that's it. Now notice we've got this cluster here, and so maybe what we want to do is change our Fibonacci here just to play around with it. It's an art, not a science. And we're going to take the snapped price off. Okay, cancel. We're going to come down. Let's come down into the middle of this bar, right in this area here. It picks up sometimes. We're just going to play around with it. Now what we've got here, if we go to our line, and just play with it here, there's our situation where this is the area where that high has been a resistance point. Now notice we've got that same configuration of price bars here as we had in the other chart. Very short. Let's squeeze them up here a little bit more so you can see clearly. We've got this configuration. It's testing. Now it may just go to this high level, but let's put a couple of funny values in here. Let's try a 127. Add the value. Apply. There's one potential target up in this area here. Okay, 146.23, and if we were to go to the 162, let's add that one as well. 162, add the value, apply, and so we've got a price target that's right back up here, very near to our previous high before the financial slide during the week before Easter. Okay, guys, I hope that helps. Let's keep a watch on these targets and see how we can apply the information either to some options trades, like some kind of a spread that you'd put here, a put credit spread perhaps under some of these lows, looking for a move north. You could conceivably, once again, use as a target for a butterfly, should you wish to try that one. This could be your butterfly target. You can play around with them and try to get a cheap option set up in taking a look even at the weeklies. So I hope that helps. Please subscribe to our channel if this is information is helpful to you. Hit the bell and we'll be alerting you to future ideas and posts on our video channel, Vineyard FX. So have a great rest of your weekend and see you next time.